What's up guys, welcome back to my YouTube channel. It's Mas. Today I'm going to be showing you the top 5 best setups of the week you could have caught using the inversion fair value gap model, and let's start right now. So the first trade you could have caught was on Monday, February 3rd. So the model is pretty simple. You are looking for a price to create a 15-minute bullish fair value gap or bearish fair value gap if you're trading short. Right here you are creating a bullish 15-minute gap, and what is this gap telling me? It's telling me that the buyers are the one controlling the market. And if the buyers are the one controlling the market, I know that a pullback towards this 15-minute gap will most likely create a new high. Okay, so knowing this information, what do I want to look for? I want to look for a price to enter this gap aggressively and create a bearish fair value gap on the way down while you enter this bullish one. And what will happen is that every single situation where there could be blood in the market is a nice possible entry. So right here, I know there's possible buyers that will defend their position here and absorb the sellers from pushing price down. So then what do I ask myself in this exact scenario? I know that there's going to be buyers that want to buy price here on this pullback, and I know that sellers are going to try to push price down. And what is the key component to this model? And it's the aggressiveness when you enter this gap. Why? The reasoning for it is that if we enter this gap aggressively, we can locate where the sellers are in the market. And if we know there's sellers here and we absorb price and then we start to push up aggressively towards the upside and squeeze those sellers, we have a lot of confirmation that tells us that the buyers are still the one in control and that the sellers are getting squeezed. So we have a nice possible trades towards the most recent highs and to continue that bullish trend. Right here, I will scale down to the 1-minute chart and I will look at what price is doing when we enter this 15-minute bullish fair value gap. We have a nice internal low here, and what do I want to see? I want to see price entering aggressively inside that gap and create a 1-minute bearish fair value gap. So right here, this is exactly what we get. We enter into this 15-minute bullish fair value gap and we get what we call an absorption. Price cannot go down and push deeper into this gap and disrespect it. So we're still respecting the 15-minute gap. We're still respecting bullish PD arrays on the higher time frame, which tells me that we are still bullish. And right here we have a nice confirmation that, oh, sellers are located between this candle's low, this candle's high. This is the aggressive sellers that push price down to create a new low. So right here, what do I ask myself? I ask myself, if we are truly bearish, we should respect this fair value gap in order to create a new low. But if we're bullish, we're going to absorb price inside that 15-minute bullish fair value gap and then disrespect the fair value gap here, the bearish fair value gap. So I will have a lot of confirmation that will tell me that the order flow is bullish and we have nice trades, possible trades towards the most recent high. So a lot of questions you can ask yourself for this trade is, where are we delivering from? We're delivering from a bullish PD array. What are we sweeping? We're sweeping sell side, so we're bullish. What are the PD arrays getting disrespected? The bearish ones will be disrespected and the bullish ones will be respected. So there's 3-4 confirmation that will tell you that price wants to get above the most recent high and wants to be bullish again. So right here, we have this bearish 1-minute gap. I know that sellers are located right here. As soon as we're gonna get above them, this is my long entry. So right here, the RR is way too screwed. So I will wait for a pullback towards this fair value gap here. And as soon as it's gonna trigger my buy limit, I will try to long towards the most recent high. So right here, I long here and I wait until my target is hit. And in a few minutes you can see you hit your target on this candle. So what can I say about this trade? Again, we have a 15-minute bullish fair value gap that was created right here. If I go down, 15-minute bullish fair value gap, what does that tell me? The buyers are the one controlling the market. If I see that price cannot is basically respecting this gap, I want to take a look at what's happening inside the 1-minute chart. And what is the 1-minute chart telling me? Are the sellers controlling the market on the 1-minute chart, or are the buyers controlling the market on the 1-minute chart? So right here, I can see a nice absorption from that 15-minute gap fill, and then we can locate where sellers, aggressive sellers that initiated that down move, are located. So once we can get above them and have plenty of confirmation that will tell me that the most recent high will be the drawn liquidity. So right here, really good trade that you could have got for a one-to-one risk to reward. Now let's take a look at the second setup you could have got this week. So looking at this leg here, you can see that there's a nice bullish 15-minute fair value gap here. And if I take out my fib, you can see that it's at the discount of that leg here, which is a high probability fair value gap. I know that the aggressive buyers are the one controlling the market, and that the pullbacks are possible areas where buyers will defend their position to create new highs. So this is, I mark out this zone here as being a possible area where there's going to be blood. So sellers will try to push price down here, where in an area where a lot of buyers will be interested in buying the Nasdaq here. So if you can see a possible squeeze in the market, it is a really good confirmation that you have a nice trade. So what do I want to see here? I want to see price enter into that bullish 15-minute gap while being super aggressive. I want us to create a bearish fair value gap on the way down when you enter this 15-minute bullish one. And what will that tell me? It will tell me that the aggressive sellers are located between this candle's low, this candle's high, so inside this imbalance. And if I can get above those sellers, they will be forced to cover the position because the absorption was made and the aggressive buyers took over the market, and the buyers are the one in control. So once they will have a possible pullback to cover the position, they will click on buy since they initially clicked on sell, which will be a nice move up, a really sharp move up, because everyone will be buying at the same time. Here we'll go down to the 1-minute chart and take a look at what is going to happen when we enter this zone here. So right here you can see we tapped this zone and we created a 1-minute bearish fair value gap. So we swept this low here and we created a 1-minute bearish gap. So I know that this zone here has a lot of possible buyers and the sellers are located right here. So if sellers cannot push price down more than that and they're getting absorbed inside of this 15-minute bullish one, and then we inverse the bearish gap that was created when we entered into the 15-minute bullish one, I have a nice possible cover here that will happen in the inversion and a possible long opportunity towards the most recent high. So right here, when I see this move up from this gap, I know the absorption was actually made. So then the only thing I need to wait for is price to disrespect this gap, because I know they will be forced to cover the position. So right here, I will wait. And on this candle right here, this is exactly when we disrespect that 1-minute gap. I will put my stop loss just below this low, and I will aim for the most recent high for a 1-to-1 risk to reward. Let's take a look at what's going to happen. And in a few minutes, you hit your target, as you can see. Now let's take a look at the third trade you could have got this week, which happened on Wednesday, February 5th. So right here, we have a nice 15-minute bullish fair value gap below the swing low here. And what do I know? I know that a field of that 15-minute bullish gap could be an area where possible buyers will be interested in buying the shares here and push price to the upside to create a new leg up. So if I see that price enters this gap aggressively and creates a bearish gap on the way down, as soon as I see the absorption happen, so wick starting to happen here inside that gap and the bearish gap getting disrespected by a big displacement candle on the 1-minute, I will then try to take a long towards the most recent high for a 1-to-1. Now I scale down to the 1-minute chart and let's take a look at what's going to happen when we enter this gap here. So here we enter this 15-minute bullish gap, and what I can see here is that there's a lot of gaps here formed on the 1-minute. There's 1, 2, 3 gaps formed. So this is not a good sign for me. I cannot locate where sellers are in the market if I don't have one super clear bearish gap that created the sweep. So right here, what I will do is that I will scale up to the 2-minute or 3-minute time frame to find if there's one clean leg that created this sweep into this gap. And if there is one clean leg with only one fair value gap, I will then trust the fact that the sellers are located inside of that time frame. So once I see the inversion happening on that time frame, I will then take the entry. So right here, If I scale to the 3-minute chart, you can see there's only one fair value gap here. So as soon as we're going to disrespect it, this is where I will take longs into the most recent high. So what do I tell myself when I see this exact structure? We entered into a zone where there's going to be a lot of passive buyers that will be interested in buying the price, and I want to see a possible absorption here. Then I can see that we're waking this level, we have a nice bullish candle closure, the absorption was most likely made. And then right here I can see, oh, aggressive sellers are located between this candle's low, this candle's high here inside this gap. If we are truly bearish, we should hold this fair value gap, hold bearish PDA raise in order to create a new low. But if we're bullish, we're gonna absorb those sellers inside that gap, disrespect bearish PDA raise, create bullish PDA raise, and then price will be attracted to highs rather than lows. So right here, I can see the absorption by those wicks. Now I only need to see an inversion of this 3-minute gap, and this is exactly what I get on this candle. I also created that 3-minute order block here, which is a really nice confirmation. I enter here, stop loss just below this candle's low, and I try to target the most recent high for a 1-to-1. I will put my stop loss just right here, and I will let it ride for the most recent high. The most recent high is not a 1-to-1, so I would try to aim for a high that is above it. So now let's take a look at what happens. 3-minute and 6-minute, and you hit your target again. Now let's take a look at the fourth setup you could have caught this week, which was on Thursday, February 6th. So right here we have a nice swing low and a 15-minute bullish fair value gap holding it. What is that fair value gap telling me? It's telling me that the buyers are the one controlling the market, okay? Because we're respecting this gap and breaking highs and rejecting lows. So right here, it is a really nice example here because we already used this gap, and for me to recycle gap and reuse it for my model, I need to get below and sweep the lowest low that filled the previous fair value gap. So right here you can see we filled this 15-minute gap, and the lowest low that filled the gap is here. So for me to recycle this this fair value gap and reuse it for a possible long, I would need to sweep this low, reject it perfectly, inverse the bearish gap here, absorption, squeeze here, cover, enter, target the most recent high. So right here, let's take a look at what's going to happen when we sweep the low and tap into this 15-minute gap. If we're truly bullish, we should reject this low here and disrespect PDA raise. So right here we have what we call a nice absorption. I can see price is rejecting bullish PDA raise. Now where are my sellers? My sellers are located inside of this gap between this candle's low and this candle's high here. So right here, I know that if I can get an absorption plus a inversion for value gap here, so a squeeze of those sellers, the aggressive sellers that initiated that move, I will have a nice possible long towards the most recent highs. So let's take a look at what's going to happen inside of this price action. So right here you can see how algorithmic these fair value gaps are. We held the wicks, the bodies couldn't close here, and on this candle right here we closed above it. So this is exactly where the squeeze happened. I will put my stop loss just below the inversion and try to aim for a 1-to-1 above this high here. So I will long, and right here we pulled back towards the inversion, held, and in few minutes right here you hit your target for a nice 1-to-1. Now let's take a look at the fifth setup you could have caught this week using the same model. So right here it's on Friday, February 7th. The same thing, same model over and over again. You can see we have a nice 15-minute bearish fair value gap. I'm on the 15-minute chart, and right here what do I expect? I expect price to drive back towards this gap, and if we are aggressive when we enter this gap, I know there's going to be blood when there's going to be a transaction inside of this price level. If buyers are aggressive and they're getting squeezed from this level, I have a nice possible short. I know basically that when I mark out this 15-minute gap, I have a lot of sellers that will be interested in buying price on the pullback. So right here, I will go to the 1-minute chart and take a look at what's going to happen when we're going to fill this gap here. Right here, you can see I'm on the 1-minute chart. There's a lot of gaps like the third setup I showed you guys. So right here, it is hard for me to locate where buyers, aggressive buyers, are on the chart. So right here I will scale up, sorry, to a 2-minute time frame, and right here you can see there's one clear fair value gap here, and if we're truly bullish, we should respect this bullish gap in order to create new highs. But if we're bearish, we're going to respect the bearish 15-minute gap, absorb those buyers, then squeeze them, force them to click on sell to get out of the position on the cover, and price will drive down aggressively because everyone on the chart will be clicking on sell at the same exact time. So right here I will just wait for price to close below this gap. As soon as we have a nice closure, I will then short, stop loss just above the inversion right here, since we have we're at the bottom of the range here, sell, and let's take a look at what price is going to do. And in a few minutes you hit your target again. So if I had to recap this trade, 15-minute gap was filled, the bearish 15-minute gap. What do we want to see? We want to see price being absorbed inside of that 15-minute gap, and we want to take a look at what happened when we entered this gap. Did we enter this gap aggressively? And if we did, we want to locate where those buyers are in the market. And if the only way to locate where the aggressive buyers are in the market and aggressive sellers is with fair value gaps. And if you see that this fair value gap was created, then you ask yourself, if we're truly bullish, we should respect this gap in order to create a new high. But if we're bearish, we're going to disrespect it after delivering from a 15-minute gap, 15-minute bearish fair value gap. And now you have two confirmation that tells you, okay, we absorbed price on that 15-minute bearish gap. Now we're inversing bullish period raise, so the chances of us going back to the most recent low is more than likely, and a cover will happen once you get the pullback towards the inversion, and price, everyone will be selling their shares at the same time. Alright, so I know I told you guys that we were going to do the top 5 best setups of the week, but I feel good, so I will show you a 6th setup you could have got again this week. On Friday, this was the second trade you could have got. You see there's a 15-minute bearish gap formed. What do I know here? I know that the sellers are the one controlling the market, and that a pullback here is going to be an area of interest for the sellers to create a new leg down and break lows. So right here, I want to see what is going to happen when we're entering into this 15-minute gap. Are we aggressive? Do we create a bullish fair value gap on the way up? If we do, can we inverse it? Right here, this is exactly what happens. We sweep this high perfectly into this 15-minute gap, and we create a displacement leg with one bullish fair value gap. If we're truly bullish, this is what you ask yourself. If we're truly bullish, we should respect this zone in order to create a new high. If we're bearish, then we're going to absorb price on the 15-minute bearish fair value gap, disrespect the leg that created the sweep and has those aggressive buyers that initiated that move, and we'll have a nice short opportunity towards the most recent low here. So then let's take a look at what's going to happen. You just need to see price closing below this gap. As soon as you close below it, this is when you go short. Stop loss, you can put your stop loss above this high here, because we have a nice low resistance liquidity run, which means that there's a trend line liquidity, and we should not reverse when you hit this internal low. You should reverse only when you hit the lowest low of that low resistance liquidity run. So right here you can sell and try to go for a 1-to-1 risk to reward ratio. Have a nice pullback. The cover is happening inside of this inversion, and right here in a few minutes you hit your target again. So I thank you guys so much. I hope you guys had a great time looking at this video and gained some value looking at the model that I just showed you. So basically this model is only looking for a price to mitigate a 15-minute bullish or bearish gap, and you want to see the aggression of those participants when you enter into the gap, the higher time frame gap. And if you can see that there's an absorption plus an inversion of the gap in the opposite direction, you have a really nice possible long or short towards the most recent high or low. So I hope you guys enjoyed this video. If you want to trade live with me, make sure to click the link in bio to join my Discord. I thank you guys so much, and see you guys in the next one. Peace out.